Nvidia stock is in beast mode once again. After dipping last week, the stock rallied again later in the week and is up 18% this month. With Nvidia earnings report only weeks away, Nvidia just announced that its Blackwell AI hardware is already sold out for next year. Now this could cause a huge problem for the company, but in this video I will show you why I believe that this won't actually be an issue. So before we get into it, if you find any value in this video, all I ask is that you smash the like button. It literally costs you nothing, but it helps me out so much. I'm aiming to get 500 likes on this video. Help me achieve that goal. For anyone that's new, make sure to subscribe so you don't miss out on any new content like this. I'm not a financial advisor and this is not financial advice, so always do your own due diligence. Now let's get straight into it. So first of all, Nvidia announced last week that its Blackwell AI hardware is already sold out for next year. Now this hasn't even launched yet, and now it's reporting that it's already sold the entirety of its anticipated supply for next year. But there's a few things that should be realized from this. There are some important details in this announcement. First of all, they have said that they've sold out of their anticipated supply for next year, and this does two things. This creates a scenario where companies are desperate to be the ones that will actually get Blackwell. But it also creates a scenario whereby Nvidia can charge whatever they want because they know that there is buyers at any price, because the world's biggest companies want the latest technology and will feel that they cannot afford to be left behind. This has created the perfect storm for Nvidia, and I will talk more about this supply crunch in a moment, because Nvidia CEO Jensen Huang has done an amazing job of hyping up his company's product. The announcement of overwhelming demand for Blackwell aligns with recent comments from Jensen that demand for Blackwell was insane. But that is what you would expect a CEO to say about these things. If Nvidia is sold out a year in advance, companies like AMD and Intel could quickly sell their AI hardware to companies that couldn't score any Blackwell hardware. Now, what do you think are the chances of this happening? The chances of a company the size of Nvidia allowing themselves to lose market share right when they have the most in-demand product in the world. This is incredibly unlikely, as I will show you in a moment. Nvidia are leading the way in the AI market, and this is already big business, and it's going to get even bigger. First of all, it's worth noting that the global AI market is expected to reach $1.81 trillion by 2030, and this is considered to be the revolution of the digital age. Tech giants such as Amazon, Google, Apple, Facebook, IBM, and Microsoft are investing heavily in AI research and development. Nvidia's Blackwell could be the most successful product in history. Now, that is a huge claim, but for a CEO who has led a company to over 300,000% gains since its IPO, I think he knows what he's talking about. Analysts have called Nvidia's upcoming Blackwell system the most ambitious project in Silicon Valley, and Jensen Huang highlighted that Blackwell is set to be adopted by every major cloud service provider and leading AI companies, including Amazon, Google, Meta, Microsoft, OpenAI, and Tesla. If you want to see me do a full Nvidia financial analysis and earnings prediction, then leave a comment below and let me know that you want to see this. My recent predictions for both SoFi Technologies and Palantir have been spot on, where I have correctly called revenue, EPS, and growth for both companies. If you want to see these predictions, then check out these videos after you watch this one. Like this video and leave a comment if you would like to see an Nvidia earnings prediction video. Now, looking at TradingView, we can see that Nvidia stock is still very clearly in an upward trend. The stock has been moving in this channel for the past year, and despite dipping last month, Nvidia stock is still moving within the parameters of this trend. What is important is that Nvidia continues to trend upwards, consistently setting new higher highs and higher lows, which validate the trend is intact. We can see that clearly here, and we can also see a very healthy RSI and a very bullish pattern has been forming in recent weeks. Now, I'm expecting that Nvidia stock could easily keep moving upwards until earnings at the very least. Two massive reasons to buy Nvidia stock before 2025. Now, Nvidia stock has been very volatile over the past 5 months, with the stock experiencing wild swings going as high as $140, but also dropping below $100 on 2 occasions in August and September. Now, these are wild swings that should not be underestimated. But it won't be surprising to see Nvidia stock regaining its growth and delivering another stellar year in 2025. So the first reason for this is a no-brainer. Nvidia is expected to ship more AI chips next year, Analysts are expecting Nvidia to witness a substantial increase in shipments of its AI graphics processing units in 2025. Market research firm TindForce believes that Nvidia could witness a 55% increase in shipments of its AI GPUs next year, driven by the arrival of the company's next-generation Blackwell processors. They estimate that Blackwell will account for 80% of Nvidia's AI GPU shipments next year, but Nvidia's Hopper chips will also continue to remain solid throughout the year. Now, one major thing that's been holding Nvidia back in recent months is that the demand far outweighs supply. But Taiwan Semi is reportedly going to double its advanced packaging capability, which will allow them to manufacture more AI GPUs. TSMC expect an annual production growth rate of 60% through to 2026, while Allied Market Research estimates that sales of AI chips could increase at an annual rate of 38% through to 2032, generating $384 billion in annual revenue. Nvidia is a dominant player in the AI chip market, with a market share that is estimated at up to 95%. So all of this places Nvidia in a nice position to capitalize on the fast-growing demand for AI chips. When speaking about the demand, CEO Jensen Huang has said that Nvidia chips, due to their high performance, will save customers time and make workflows more efficient, which results in lower total cost of ownership over time. In the long run, Nvidia's chips may represent the best bargain. Recently, Oracle co-founder Larry Ellison said that he and Tesla chief Elon Musk begged Nvidia to sell them more chips. Nvidia has struggled to meet the needs of these companies because demand for its chips has exceeded supply. But now, with TSMC increasing capacity in 2025 and the launch of Blackwell, Nvidia might finally be able to supply that demand, and this could see revenue skyrocket over the next few years. To put this into perspective, just look at Nvidia's revenue growth since the launch of Hopper 2 years ago. Quarterly revenues have increased about 400%, and the launch of Blackwell could see this growth continue. Accordingly, higher sales of AI GPUs should translate into solid growth for Nvidia in the next fiscal year, while its pricing power in the market would lead to healthy growth in its bottom line as well. Nvidia's revenue estimate for the current fiscal year is $125 billion, with an EPS estimate of $2.78, while Nvidia's revenue estimates for the next fiscal year is $176 billion, with an EPS estimate of $3.92. That is an expected revenue increase of over 40% and EPS increase of over 41%. Looking at the investor's presentation, we can see the huge revenue growth and demand increases for Nvidia products, and overall just how much this has increased over the past year. Across every segment of the company, data centers, gaming, professional visualization, and automotive, Nvidia has been able to justify its valuation with outstanding growth. In fact, Nvidia's earning multiple is currently lower than its 5-year average PE of 72. Also, Nvidia's price earnings to growth ratio, or the PEG ratio, is just 0.14, meaning that the stock is very much undervalued considering the growth that is forecasted to deliver. The PEG ratio is a valuation metric that takes into account the potential earnings growth that a company could deliver. A reading of less than 1 means that a stock could be undervalued. That is why now would be a good time for investors to load up on Nvidia stock before the potential jump in sales of the company's AI chips in 2025, potentially sending it soaring. So let me know what you think about this. Are you bullish on Nvidia stock, or do you think that Nvidia has gone as high as it can go? There's always a lot of talk on social media about Nvidia stock, but always do your own due diligence. Remember that I'm not a financial advisor and this is not financial advice, so always do that research. But if you enjoyed this analysis, then please like and subscribe. I hope you make a load of money on this stock. Follow me on Twitter and I'll catch you in the next video.